What is Bitcoin? I'm Marco Perry. Welcome to the Perry Platform. It seems like everyone is talking about Bitcoin these days, so I thought it'd be an interesting topic for us to try and break down. Now, as a disclaimer, I'm not a Bitcoin or cryptocurrency enthusiast by any means. I understand the product. I do see that there is a potential to generate some great returns in that market, but I do balance that with some skepticism about what the future of that looks like, at least when it comes to it as an investment. I certainly wouldn't recommend going out of your way to put in money that you cannot lose into something like Bitcoin or Ethereum. That just reeks of a bad idea, especially with these crazy valuations that we're seeing as of late. So this won't be me trying to sell you any coins. I simply want to talk about the ideas that underpin them. So, the first question, what is Bitcoin? So fundamentally, it is a cryptocurrency that's built with blockchain. So two key terms there, crypto and blockchain. Let's begin with blockchain. It's a decentralized way, a computer language, of storing and utilizing information. It relies on this thing called a public ledger. You can think of it as a list, and that's kind of what it is. It's a list that tracks the movement of the coins. In this case, we're talking about Bitcoin, so it will be the Bitcoin blockchain ledger. Now, these ledgers are particular to the type of coin that you're thinking about. Bitcoin will have its one, Ethereum will have its other, Dogecoin will have its own as well. Now, this is somewhat of the defining characteristic among blockchain type products. It's the fact that you're relying on that public ledger, and public is the key term there. Every person on the network has a copy of the ledger. In other words, they have a copy of every single transaction that goes on. With a bank, everyone relies on what the bank tells you. It's the bank's information. You can regard the bank as the gatekeeper. Now, back to crypto. With this public ledger, every user in the Bitcoin network can see every transaction that occurs, and of course, with that, it provides a sense of uniformly distributed communal way of keeping track of things. And before we move into that, I want to point out, it's not like you can see your neighbor's name and what they're buying and selling with Bitcoin. It's a string of random characters associated with their wallet address, their Bitcoin wallet, where their Bitcoin is stored. So you can see that wallet ID, but you won't know who it's tied to. And that's where the anonymous component comes in. Unless someone does go forward and tell you for some reason that this string of characters is my wallet, and whenever you see it, it's me, without that information, you just wouldn't know who's who. The very fact that the ledger is publicly distributed among thousands and thousands of people, though, is very useful in terms of security and making something like Bitcoin very hard to hack. Because instead of needing to change just one record, with Bitcoin, you would need to alter millions. If you were a hacker and you only needed to get into one ledger, or 10, or 100, or 1,000, well, that would be child's play. But if you tried doing that on the Bitcoin network, the changes would be rejected because they wouldn't match the public consensus. You can edit your individual ledger all you want. You can edit your family's ledgers all you want. You can edit the ledgers in your city all you want. But because the overwhelming majority of people who have their own copy of the ledger, that saying something different will nullify the changes you've made. It's almost a forced consensus that's coming out of this. You can imagine a typical banking system as being the opposite of that. You simply have to hack into their one mainframe, hack into that one set of records, change that, and there you go. You effectively altered the flow of money. With Bitcoin and cryptocurrency, though, it's about 1,000,000 times harder because there are 1,000,000 times more things that you have to get into to even have a chance at attempting to change the reality of the money flow. It's argued that by doing this, it puts the control of the network, the money system under Bitcoin, in the hands of the people versus the government or a central bank. The government or the bankers or hackers, any of these parties can't manipulate the item, the crypto, to suit their agenda. So that's the blockchain part of the equation. Now, the cryptocurrency. Some of that was referenced in the previous part, but you can simply regard it as digital money. Once again, this is money that lacks a central authority or administrator. You can send it directly to a peer without the need of a third party. You don't have to go through a bank or PayPal to send someone Bitcoin. You can send it to anyone you want, anywhere in the world, as long as they have a Bitcoin address. And, funny enough, you can send it extremely cheaply. I believe we saw something recently like $1 billion Bitcoin transaction on the public ledger. We're not too sure who it is, of course, but we do know it happened. The Bitcoin fee, the energy fee, to make that transaction was something like $10. Now, imagine what a bank would charge you to do a wire transfer internationally of that magnitude. I recall I paid something like $10 in fees for something akin to a $1,000 deposit. That's what was paid for a $1 billion transaction on the Bitcoin network, so that is quite astounding. So there you go. In a nutshell, you're now familiar with the cryptocurrency and the blockchain aspects of Bitcoin. There are many people who think that Bitcoin is synonymous with all cryptocurrency. People will go out and say, which Bitcoin should I buy, when they really mean which cryptocurrency? And they'll think that blockchain only applies to crypto, when blockchain can be used for other things too, like smart contracts. And there is overlap between that and cryptocurrencies, but blockchain is simply just the software on which crypto is built, and crypto is just an asset class for all these different tokens and coins that you see floating around. Of course, there is much more depth to the topic here, but dispelling all of that would take quite some time, and I think we have enough of a foundation now to move on to some of the benefits and drawbacks of Bitcoin and cryptocurrency at large. So, beginning with the benefits, many people say it allows for the removal of inefficient central money authorities like the central bank, government-run systems like that. This really is a free market approach to money. There isn't a banker artificially pumping up supply, printing out billions of dollars overnight, and on the reverse side, there aren't people taking away that same money the next day, playing with these things and creating fluctuations. Bitcoin is steady. The price is set totally by the market, and it's generated by the algorithm. There isn't a way to produce billions more of Bitcoin overnight. There are these things called miners who generate new Bitcoins, but it's set by the algorithm, as we talked about. There's a finite amount that can be made, and after it's all made, that's it. And I do recall there's an estimate by at which point Bitcoin will be fully mined and the supply will be set. I don't recall if it was 2040 or 2050 or 2030. It's something like that. So there is quite some time still to go in that regard. There are many people too who champion the notion of Bitcoin because they like the idea of freedom. Now, you might recall that there was quite a lot of scandal in regards to Bitcoin itself, actually, when certain banks were denying deposits into exchanges because they didn't want people to be buying these cryptocurrencies. And people raised the question, well, is it the bank's right to do that? Should they be allowed to tell me I can't use my money on crypto? On what grounds? Based on their arbitrary policies? It's my money, after all, right? And people didn't like that. It rubbed them the wrong way, and I do think that was the catalyst that really made freedom a big point that people push when talking about crypto. They want to be able to buy whatever they want with their money within the realms of the law. Buying Bitcoin is not illegal, so why were banks denying you access to your money? And would they do that again with something else in the future that they don't like? Keep in mind, banks, at least in Canada, are publicly traded companies. They have bottom lines and they have stock prices to worry about. If they notice that there's a threat to that, will they take actions like denying you the ability to purchase it? The potential clearly is there and people don't like that. Now, the second P in the pod here that matches the concern of freedom is privacy. People don't want banks and governments and central authorities to be prying into their records and seeing what exactly it is they're buying. Now, this can go wrong, as we'll talk about in the drawback section, but keeping it in the positive sphere, if you're buying certain things that perhaps you do want to keep completely confidential and you would be rather dismayed if something like a hack came through that exposed your purchasing records, I'm thinking maybe funding your favorite podcast that might be seen as controversial, stuff like that, even buying Bitcoin as we talked about. And even beyond this, if you don't really consider the items themselves, just the peace of mind that comes with knowing that the government and Big Brother can't easily view what you're up to, it's akin to the reason why people use VPNs in some ways. It's not that everyone's trying to do illegal things online. They're simply skeptical about what authorities might do with their data if given the opportunity. And they want to deny that opportunity in any ways that they can. Now then, of course, we get to this other thing of investment potential. There are plenty of people who have made a decent amount of money off of Bitcoin, but keep in mind, there is a survivorship bias here. There are many people who have gone broke betting it all on cryptocurrency as well. So, while you may see the occasional success story on Reddit or in the news of someone going from $100 to $100,000, there are many people too who go from $10,000 to zero. In this crypto market, there are many coins. It's not just Bitcoin. There are hundreds of them, all with varying scopes, missions, potential, and whatnot. The best investment advice that you really need to follow is not to put your money into things that you don't fully understand. You have to grasp these ideas before you're willing to put a significant chunk of money into them. If you don't understand the item, how are you going to understand the movements in the market and the potential for adoption and the user sentiment around it, and perhaps where the projections are heading? Do your research and don't foolishly jump onto the bandwagon. I know it's enticing, all of this hype and the FOMO, but be careful here. The last thing I want you to do is lose your hard-earned money in something as risky as crypto. And that's the bottom line here. It's a risky market. These swings are insane. Unlike the stock market, a regular day in the crypto environment can see your portfolio going up by 10%. Or, conversely, going down by 20%. I've seen it happen numerous times over the past month. That might happen in the stock market maybe once every couple of years. That's the norm for crypto. So if you have a low risk tolerance, don't even think about it. Now, moving on to another positive, it's the notion of universal money. You have the American dollar, the Canadian dollar, the euro, all of these things. Then you have the conversion rates, and perhaps some banks don't accept certain types of currencies. You need to have a US account, a European account to do this and to do that. And international wire transfers are complicated. Well, crypto solves all of that. A Bitcoin in Canada is the same as a Bitcoin in America or a Bitcoin in Africa. It does not matter. Of course, when you go to convert it back to fiat, it's going to depend on which fiat you choose to convert it back into. But keeping it within the realm of crypto, it's universal across the board. And that has many positives. And as we hinted at before, this has become more relevant during COVID. Bitcoin is immune to rapid dilution. There isn't a central authority that can open the floodgates and put in millions and millions more of Bitcoin into the market, crashing the price and creating supply and demand issues. With fiat currency, that's possible though, and we've seen that with the Bank of Canada and other central banks around the world. Look at the chart, if you can find it online, of the circulation of money, and see how during COVID, banks printed their minds off. Dollars are circulating at rates we've never seen before. And what that's going to do to inflation and things like that has yet to be fully seen. We're seeing inklings of a pattern. Inflation is certainly skyrocketing to rates we haven't seen in decades, but the full impacts are not truly understandable here. And many people prefer a Bitcoin solution simply so that's not possible. Now, to move on to some of the negatives of Bitcoin, this might be controversial. I can already imagine some of the big fans will get angry at me here, but it's very obvious that in its current state, Bitcoin and cryptocurrencies are not practical. You cannot go and buy a coffee at Tim Hortons with Bitcoin. You cannot go buy your groceries with it. There's only a very select few instances where you'll even have the chance to use cryptocurrency as a currency. These days, it's practically more of an investment. It's more akin to a stock, where I can't just go to the grocery store and give a stock to get a bag of rice, but I can sell the stock and get the fiat to do that with. People who've viewed crypto as this revolutionary, transactionary thing, well, that may be the case down the road, but certainly today, we're not there. The primary function is speculation and people trying to make a quick buck off of it. Now, along with that, you have this problem of complexity. Now, to the avid crypto user, I guess it's not complicated anymore, but to the regular citizen, the notion of having a crypto wallet, the notion of having a Bitcoin address, the idea of sending things through that mechanism, it's not intuitive. There is some research that has to be done, and you have to know what you're doing because you can't reverse transactions. If you mess something up, your money's gone. Now, think about people like seniors and individuals who have had perhaps a hard time even adjusting to a credit card. Cryptocurrency is one step above that. These things have to be factored in, and I think at this point it's safe to say that Bitcoin is not on the same level of adoptability as a $20 bill. People have a certain idea of how money should work, and the physicality of it does play a role in it for a lot of people. Not everyone, of course, these days, but still, a significant chunk of the population. To imagine something like Bitcoin becoming the predominant tender in a country, I'm not too sure how that would happen. It may become the predominant tender among an age group or a demographic, but a countrywide takeover or a nationwide or a worldwide adoption full scale, I think we're quite a ways away from that. So maybe that's a good thing for you, though, if you regard that as a long-term potential. Perhaps you think that getting into Bitcoin now is a good idea. But if you're in it for the short term, I think you should adjust expectations accordingly here. One must also consider what the government might do. At this point in time, Bitcoin is certainly on their radar, but if it ever got to a point where it was threatening to do something like replace the Canadian dollar, would the government sit idly back, or would they crack down on it? China cracked down hard on Bitcoin, if you might remember, a year ago. They took it to exchanges. I think they shut down a bunch of them. They banned mining Bitcoin in the country and all of these things here. Why? Well, it posed a problem. China is very keen on things like government control. Bitcoin is antithetical to that. Now, even in a place like Canada, they might view the risks of something like Bitcoin and the lack of control from a monetary fiscal policy standpoint to be a great threat to the country. And they have ways to shut this down. Following suit with China, banning the exchanges, getting rid of miners, maybe even imposing fines. If you hold Bitcoin, these things are possible. Now, while that's not a threat right now, these are growing pains that we'll encounter if Bitcoin and crypto get to a certain scale. And what if the government releases their own crypto? Would a person be more keen on the Canadian dollar cryptocurrency or Bitcoin? It's a big question. And what if the government incentivizes people to use the Canadian government crypto? Well, that could do away with Bitcoin and all the other coins in the market currently. So keep an eye on that. Now, finally, you do have the criminal element, which is a concern to a lot of people. There's no doubt that there are individuals who take advantage of the privacy and the freedom of Bitcoin to do bad things, like purchase weaponry and narcotics and things that I don't even want to talk about on places like the dark web. The counter argument that I've seen to this is people say, well, individuals do that with fiat currency anyways. People buy drugs, they buy weaponry, they buy all those things with money, which might even be more difficult to trace than Bitcoin in some ways. Now, make of that what you want. I'm not too sure where I stand on it. It's definitely a problem. And if someone came up with a way to handle that, I think Bitcoin and crypto would be in a better space overall. But then again, maybe a solution to that problem would violate the fundamental tendencies and pillars of the crypto world. So, not sure if it'd be accepted even if it was proposed. So, moving away from the pros and the cons now, there is something to say about evaluating value, and here's where I'll close off. What determines the price of Bitcoin? We've seen it fluctuate from $1 to $10 to $100 to now something like 60,000 Canadian. Well, simply put, it's just public consensus. People have put this value on Bitcoin, and that's what they're willing to pay for it. And if you didn't know, you can buy fractions of Bitcoin. It's not that you have to buy one or nothing. People buy 0.00 whatever to make ends meet. Now, given the fact that this asset's value is entirely based on perception, that presents a risk. If things were to happen to drag that perception through the mud, well, that would be the end of its value. It's not something like actual legal tender, where the government's guaranteeing that places that sell stuff will have to accept it. And there is no such guarantee in place with Bitcoin. It's not like a gold bar where it's an actual physical asset that you can hold and do things with. Presumably people will still want jewelry even if the interest in it dies down at some point. Bitcoin has the potential to go to zero. Same as with certain stocks and certain companies. That's why I do think it's more valuable to view it as that versus a currency at this point in time. It's a speculative asset, and in some ways you're betting on the public's perception of Bitcoin increasing over the long run. And if your analysis does not lead you to that conclusion, be very wary of it at this point in time. Now, I'll close off by saying nobody knows the future. People who are telling you there is no uncertainty that Bitcoin won't skyrocket and you'll miss out not investing in it today, they're speaking nonsense. The people who are saying the opposite, that's going to crash and there's no doubt about it, are also speaking nonsense. It can go either way. It can even go through a middle path too where it just flatlines for a while. Nobody knows what's going on. It's imperative that when you're dabbling in the crypto space, as I've said, you do your own research and you're very confident and you're only playing with money you can afford to lose. These investment gurus most of the time have no idea what they're talking about. To you, if the risk seems worth it and you can afford to take that risk, then have at it. But don't be confused and lured into the peachy words of someone who wants to shill and sell you a crappy coin. Now, this is more relevant to things other than Bitcoin. There are many of these small startups who make coins and they're hyping them up. The next Bitcoin, the next this, the next that. And it's just a scam. Crypto, as I've said, is complicated. So, make sure you're prepared before you get too deep into it. And now with that, it does bring us to the end of our conversation for today. If you enjoy the content, be sure to leave a review and share. That'll help us grow. And you can find me online at perryplatform.org and on social media at perryplatform. Thanks for joining me, and I'll see you soon.